raised 844 million euros of equity, of which a small portion of that is a co-investment pool that we have governance over. And that capital pool is spread pretty much globally, but it's dominated by the US. About 65% from memory are American investors. We did really well. We got a lot of great reception from our existing investors. We got delayed a bit, obviously, because of COVID, but also we had a few large investors who were new, who were doing their diligence and their work, and it just simply took a bit of time to finish. We're following really the same strategies that we've done fund after fund, which is largely Western Europe focused, which would be defined as sort of UK and Germany for a chunk, Spain and Portugal, or growth markets for a chunk, and then the balance, the rest of Western Europe. We are continuing to invest in direct assets, direct property and property portfolios, but also complex positions where we're buying into debt and into corporates, which are backed by property. Interesting opportunities, but also, major challenges. So retail remains very, very challenged. It's not obvious at all of what's going to happen post-COVID, and therefore a lot of people are looking for alternative use, or whether some version of retail will emerge. Big question mark. Followed then by probably hospitality, which will do very well, but it'll take time. And on the office market, there's a big discussion about whether people are going to ever go back to offices. I would tell you, I think absolutely they will go back, but it will clearly be modified. And our approach has been that, leading into COVID, or when COVID really kicked off, people were growing really quickly, and it took a lot of space. And if you speak to a lot of our tenants or future tenants, most people think that they want to give about 10 to 20% of their space back. So the difference between this fund and the last fund is, for example, the last fund we did a lot in Spain and Portugal, which has done very well. We look to continue to do that, but this time the UK and Germany has reemerged again as potential opportunities. I think there's a couple of key aspects, but I think it starts with the team. We have an exceptionally strong group of partners, including mid-level and junior people who have been with us for a really long time. And I think that stable team with enormous industry experience and industry knowledge and local property knowledge is very powerful. You then complement that with local partners that we work with for 20 years. So we do a lot of re-ups, a lot of repeat business. So there's a very strong relationship with our partners. And that gives us, again, very long dated industry knowledge and specific property knowledge, which is powerful. So that'd be one massive advantage. The second is we're not really a global fund, right? We're only focused on Europe. So we have very much of a focused approach in terms of what we do and how we work. And third is there's not levels of bureaucracy in our organization in terms of, multiple committees. All of our funds have had a very strong focus on ESG, and we have a big impact focus as well. But we have two legs, right? So in our current fund and our main strategy, all of our investments have to comply with very key focus principles, typically on the environmental dynamic and the social fabric of the local community aspect. That has to be reviewed as part of our diligence, part of our investment committee review, and as part of our ongoing monitoring. So not only do we comply with the various formal regulations and the guidelines that everyone talks about, but we actually in practice have implemented that in our investments. In addition, we've launched a small fund called Women in Safe Homes, which is focused on residential real estate that is rented to charities and registered providers that help women who are suffering domestic abuse. So that's a very important part of what we're trying to do. It's a very important ESG or impact focused idea. It's something that's incredibly in need. There's something like 16,000 women that we were told that need it. And we've done it in partnership with Big Society Capital and with Resonance and the group and MacArthur Foundation. And I personally have committed. So we have a core ethos of observing, respecting, let's call it best practice within ESG. But in addition to that, we actually have a specific strand of effort focused on impacting investing, particularly for those in need, in this case, women suffering domestic violence. So it's a gender lens focused fund in that regard. So we think we've been early in the stage. We started when we began the business 21 years ago, and our efforts in this area have really proved out.